TV Cycles here with a bonus video this weekend. I would like to look at another cycle. I've been showing this before but not lately, and it's the quarterly cycle or the seasonal variation and the more visible 6-month cycle. So the 3-month cycle I relate to the quarterly earnings. So it's the earnings cycle, and it happens to align also with the 6-month geomagnetic cycle, because around March and September the geomagnetic field is vulnerable to solar storms or the solar wind, and we most often get these solar storms around March and September. So let's have a look at what this cycle tells us. Unfortunately, it has the same outlook as my cycles in yesterday's video. So as you see, I have marked here with dark red the lows around end of March. And we see that worked at the COVID low. If we go to this low, you kind of have, well, that was the actual low of that correction, so it came a little bit early. And if we go to this one, well, that one also came a little bit early. And here we are in March 23. Again, it came a little bit early. So there seems to be a tendency that the March lows are earlier in March and not at the ideal cycle low around end of March. But then we get to this low around March 24. That one actually was late in April 24. So that broke the pattern kind of. So, but yeah, normally we have a low around March. And this cycle goes further back, but it does not always work this good. It has been working very good at least the last 4 years. So we now have a low coming up around end of March. So let's have a look at the other 6-month low. That's around September. And we normally have the big market panics are around September, October. So we have this low that was perfect, aligned with the cycle, and we have a low around October 21. It came a little bit late, and we have a low around October 22. It came a little bit late, and we have a low around September 23. And I think that was when the unrests began with Palestine and Israel. So the market made another leg down. That was kind of not expected from this cycle. This cycle was expecting this low, just an ABC correction and not the final leg down. So it kind of worked, but it couldn't see that final leg down. And this one is kind of messy. You could interpret this as a big ABC correction where the C low is a higher low, so it's a triangle correction. And if you do that interpretation, well, then you have an early low. So it kind of works, not perfect, but it is helpful most of the time. And now let's have a look at these quarterly lows between the 6-month cycle lows. And we see this one works. We had a low. This one, not really. Market did go a bit sideways here. It was consolidating, but no visible pullback at that one. And here, there's something going on here, but some pullbacks, but no, you can't really see it. And then we have this one. Well, yeah, that one worked better. You kind of had an ABC, a sideways consolidation. This one definitely worked, and this one worked. Here you kind of see something going on, some kind of ABC sideways consolidation. This one, yeah, that kind of worked. But here it gets messy. You know, at this point we do have a sideways consolidation. So, you know, sometimes that is all you get from these cycle lows. And then we get to the January lows. Yeah, that kind of worked. It was kind of a late low. So you see, it has some value. It's not a perfect cycle, but it seems to influence the market most of the time. At least these 4 years, and it does work going further back in time, but not always as well as right now. And as I said, it is suggesting a low around end of March. And how does this work with my other, or what I told in yesterday's video? Well, we have this cycle, which in my opinion is a more important cycle. It's the 17-week cycle, and it goes down into late May. I think, you know, this is a composite. Here I have drawn my two possible 10-week oscillations. So one making a low, you know, around this point. That would bring us to end of March, and then we could have another one making a low around June. So how would that look like? It would be like A, B, C possibly, and then some kind of a shoulder here before we go down further. So what do you see here? The red line, that's a composite of several cycles. So this composite is generally bearish into, well, April, May. Here it goes sideways, and then it starts to become bullish in June. You know, so this is a possible scenario, but it is not quite the same what this cycle is saying. Now let's see, the next quarterly low here is end or mid of June. So, you know, yeah, end of June, mid-June, yeah, that's this one. So we could have a what could be called a quarterly low end of March, and then another one mid-June perhaps. And the mid-June low would be a quarterly low and a 17-week low and a 10-week oscillation low. But you know, this is just one possibility. First we have to see how this current correction, how it behaves, how it ends up. If we have enough, if the downtrend is strong enough, then we should make a lower shoulder on this next one. But you know, if market stabilizes here, we could squeeze all the way back up and stay within this long range here. So we have to wait and see. But the cycles give us a pattern or a hint of the timing in this. But the price action is yet to be evaluated. So that's the bonus video for today, and see you in the next one.